Should silver be part of your investment portfolio? We will answer this in detail in this video with proper data. We will look at current uses of silver, how silver compares to gold, silver versus S&P 500, key supply and demand trends, a look at silver's historical price movements, the 2011 spike and crash, silver's effectiveness as an inflation hedge, and finally ways to invest in silver. Now, let us start with the uses of silver. Silver is used across a wide range of industries, from electronics and medical devices to 5G infrastructure and sustainable technologies like electric vehicles and solar panels. In short, silver is a critical industrial commodity, and that's the key takeaway for you here. And remember the silverwares and the billions? Now consider the projected demand for silver in the EV and solar photovoltaic sectors. Demand for silver from EV is expected to triple by 2030. Now imagine how much silver the world will need to reach net zero by 2050. We don't talk about silver without talking about its sibling, gold. One useful way to compare gold and silver prices over time is the gold to silver ratio. Recently, this ratio has been rising, indicating the silver's price hasn't kept up with the pace at which gold is growing. Now let us take a look at how silver and gold move in relation to the S&P 500 index. Think of S&P 500 as the counterpart of Nifty 500 in the USA. Over the past 30 years, see how gold and silver have followed surprisingly similar patterns compared to the S&P 500. As you can see from the chart, silver hasn't quite kept pace with gold or S&P 500 in terms of price growth. Now look at the ups and downs. This is a reminder that silver and gold carry real risk. The volatility is clear, especially for silver, which has a standard deviation of around 25-30%. In risk terms, holding silver is like holding a small cap mutual fund. Now let us look at the global supply and demand for silver. Clearly, the supply has remained flat, but the demand has actually kept rising in the last 3-4 years, especially after COVID. In short, the demand is much more than the supply. So what is the price of silver as of today? Silver is nowhere near the historic highs of 2011 in spite of the demand and supply mismatch. That prompted me to look at 2011 in a little bit more detail. Why did silver go up so drastically and why did it crash? Silver rose from 2009 to 2011 because of many reasons. A few I have listed out here. Post 2008 financial crisis, silver was thought as the safe haven for investment. Rising industrial demands was another reason. Speculation and inflation fears, along with introduction of silver ETFs, was another big reason. High-profile investors like Warren Buffett seemed to favor silver. Supply constraints was another reason, and the last, dollar devaluation fears being the biggest of all. There are many reasons why silver crashed post-April 2011. The price hike of 180% in 2011 was pure speculation and the crash was inevitable. Number two was CME raised the margin requirements for silver 5 times in 9 days. This forced many traders to start selling. The dollar became stronger and there was no real inflation post the crisis of 2008. Number 4 was gold actually started peaking in September 2011, suggesting silver was more speculative trade and hence silver corrected. Is silver an effective inflation hedge? Silver tends to do very well under uncertainties as in 2011 and 2020, but they do tend to slide back once the euphoria subsides. So in my opinion, silver isn't the best instrument out there to hedge against inflation. The most liquid way of investing in silver is investing via silver ETFs. Most of the AMCs have their own ETFs for silver. To invest in ETFs, you need to have a demat broker account. You can choose to invest through the mutual fund route. Remember that these are fund of funds which invest in the underlying ETFs. Also note that the cost structure would be slightly higher on the fund of fund route. The next, of course, is the age-old way of investing in bullions, our favorite coin and bar route. For the nuanced investor wanting a USD exposure, investing via international silver ETFs is another choice. A quick recap of what we discussed so far. While silver is used as an inflation hedge, the data does not quite support this view entirely. At least the relationship is not quite linear. Silver tends to do very well under uncertainties, as in 2011 or 2020. Present uncertainties across the globe does add some shine to silver. Silver is one key component in any of the sustainable solutions being discussed for the countries to reach net zero in carbon emission by 2050. Clearly, supply is not able to keep up with the demand for silver. Silver has similar risk as a small cap mutual fund. Do your due diligence before investing. How much you should add to your portfolio is something I will leave you to decide, because it depends on your personal factors and risk appetite. I hope I've given you enough data and understanding to make a decision, and I hope you learned something new more importantly.